All right, now we are live.
Oh, joy.
Let's see if this is working here. This is the first time we're using this new platform. Okay, good. Yeah, we're live. I can see it.
Excellent.
Awesome, awesome. Okay, so welcome everyone. Welcome to episode. Uh, is it 8 or 9? I don't even remember. Episode 9 of the AI Circle, and this is the last episode of the AI Circle for 2022. So happy New Year, everybody.
Happy New
Um,
Year.
the Yes, yeah, absolutely. And so as you can see, things are a little bit different. The show looks a little bit different now. It's not the Zoom screen anymore. We got rid of the virtual backgrounds. We're going for a new look and feel here. And that this is the way this is kind of a preview of what you are going to experience in 2023. So let's jump right into the agenda for today. And the agenda for today is we're going to recap 2022. We're going to recap what iFlip did or didn't do, maybe is the better way of putting it, and what the market did, and compare the two. We're also going to talk about what's ahead in 2023, particularly the first two quarters. What can we expect in 2023? And we have a couple of raffle winners and some announcements about what's ahead coming as well. So before we can get to any of that, though, we have to go through this everyone's favorite part, the disclosure. So please bear with me as I go through this with you. Disclaimer: iFlip Investor Incorporated and iFlip Financial Services are not financial advisors and do not make, buy, sell, or hold recommendations on any financial instrument. This presentation is for educational purposes only. Unique experiences and past performances do not guarantee future results. All financial investments involve risk. You should speak with your CPA or financial representative to ensure that the iFlip smartfolios that you select are suitable for your investment profile before trading in a live brokerage account. So with that out of the way, I'm going to pass it on over to you, Kelly. And what do you have for us? Wrap up 2022 for us.
Okay, Aaron. Hello, everybody, and happy end of the year between Christmas and New Year's. So we're going to recap 2022 for the markets. We kind of all know what it is, and then go forward and try to prognosticate a little bit towards 2023, and especially in terms of how we expect our machine learning, AI, algorithmic portfolios will perform. The various ones will perform in 2023, hopefully a little bit more granular by quarter. So everybody, 2023 comes to a close within the next 2 trading days. And as everybody, I don't know if anybody knows, but the market was down again today, another 1.24%. I have a picture of the S&P 500 spider for you on the screen. I hope you can see it. We started off here in January. As you can see, literally almost to the date, the market made a high at the December 31st of last year. And we are going to be going out nearer the lows of the move down in 2023, given expectations that the next 2 days will be relatively quiet, maybe marginally to the downside. As you can see this year, the recap is obvious. The market went down. We all know it. We see it. We felt it all year. It behaved almost on a quarterly basis to a large degree. Where at the end, in the beginning of the third quarter of this year, the market, as you can see here, tried to mount a end of year quote unquote Santa Claus rally. But it looks like Santa couldn't fit down the chimney against inflation and the outlook for 2023. And it fell off around 10%, literally, from its high that it tried to move forward on the Fed news or in the GDP news that came out in the middle of December. As you can see, this little high here, and then we lost subsequently 24, 34 points, about 9% literally in the last 2 weeks. So the S&P is going to end up down 20% this year. The NASDAQ has fared worse, so we'll just recap it. Here's the triple Q. The NASDAQ is literally printing its lowest close today of the year, and that is down closer to 40% on the year. And the Dow Jones hung in there this year, but again, I will point out it is just 30 stocks, and this 30 stocks is not, I repeat, not representative of what's going on in the economy or the world. This index is completely biased. It does not represent the reality of the stock market. It's quite sad that most of the pundits and what we see on a screen, if we were to turn on a news channel, is the Dow, because that's not what happened this year. This year was full of pain. The good news is for Flip customers, we have been out since literally the beginning of the year. I'm going to stop the share and then share a new screen very quickly here so that you can see where I'm going on that. And it will be this screen here, sharing. So I think we can now see kind of at least the algorithmic portion for the most part of our models for 2022 on our main benchmark model. The benchmark model trades the S&P alone. And we use the benchmark model across all of our portfolios to help guide them to what we should be doing in general in the market on a year-over-year basis and on a trade-by-trade basis. As you can see, last year, you see the signal here on December 27th? That was our exit on the model. It was an exit due. If you can see it barely there, there's a little AI. It says AI on all these bars. The AI gave us a signal. And remember, AI is reading. It's a machine learning issue where it learns data coming in from fundamental sources, everything from things like Zacks or Ned Davis to the Federal Reserve, some other kinds of data that we look at. And we have found credit card data, for example, we found that AI gave us a very timely signal this year. This is not part of an algorithmic portion. This is how we use machine learning and artificial intelligence as the broader term to be able to guide our rules-based method of investing. You can see that these are the trades we made for the year. We tried to buy it, we lost. Tried to buy it again, we lost. AI, then algorithmically, AI was out through these periods, and now we had no technical reason to buy. So we remained out at the end of the year. We wiggled over here just early December, and then we got out again. And now we are literally near the lows of the year. This is how we do business at Flip. This is how your portfolios are run. And these are signals that will show up in your accounts should you hold the spider in any of your smartfolios. That's one of the reasons why most of our customers have largely been in cash all year long. And that obviously was a good thing for 2023. The only recap I can add on 2023 is that, on 2022, is that the market fulfilled its expectations, both from my prognostication, and thank goodness I was right for once. But more importantly, I think the science of trading actually agreed with, I think, most people's interpretations of this country and and our economy. And the markets literally did what we kind of all expected them to do, which was to go down this year. Most pundits believed it would be a tough year, except for a few of the larger money managers of the world that always feel it's going to be a good year. And of course, they were way off and have lost abysmally. And we can include the usual suspects of Fisher Investments, for example, or ARC Trading. These are huge money managers that have more assets than, frankly, they deserve. But again, they do a good job in general when the market goes up, but they're not really equipped to manage a down market. And that's what we're here for. Now, Aaron, beyond that, I think I'd like to go into a little bit of 2023. Where do we
I'm
go
gonna
from
pause you though, Kelly. For let's get to 2023, absolutely. But I do have to apologize to everybody because there was a technical mix-up. We started the stream that ended up streaming to a mailbag link instead of an AI circle link, and there's no one else to blame but me for that. So I apologize. I think everybody is here. If you know someone who is still waiting in the other room or in the other stream, please let them know to come to this link. I think we moved everyone over, so I sincerely apologize. As you can see, this is a new setup with a new platform and with a new look and feel, and I guess that one just slipped through the cracks. Sorry about that. While we're still on 2022, I did want to talk about a little bit of another aspect of 2022. I'm going to share my screen now, Kelly, and then
Go
I'll
ahead.
bring yours up again in a second. Because 2022 was also a big year, and not in the good way, for crypto. The most recent scandal being the FTX scandal, but that wasn't the only one. And I'm going to bring up a visual here that I think is going to be interesting. And Kelly, I want you to look at this too. So please let me know if you can see this. These are the list of companies that failed only in 2022. I can't remember a year. And Kelly, I'm interested to hear your opinion on this. So many companies that are like big name public companies, some of these that just completely went bankrupt. I think we have 9 companies here, if I know how to count correctly. Right, we have 9 companies. Some of them exchanges, some of them FTX being a fake exchange, some of them trading platforms, some of them lending platforms, and they just all collapsed. Like I know BlockFi. I had a little bit of money in BlockFi, like just a few dollars in BlockFi after my withdrawal. Thank God I withdrew. Like, and when I got that notice, I was like, oh my God, they're one of the biggest players. I can't believe, they went down. So Kelly, just your thoughts and your comments on the crypto implosion, or the crypto winter, as a lot of people are calling it, of 2022.
Absolutely. I mean, the companies that you see there were not the contagion. Those were companies that existed on the margin inside the crypto space. They had a business model, they had funding because everybody was excited about crypto clearly coming into 2022. FTX, of course, literally was the largest of these companies, the most well known, the most recent. And as a result of that, it will spread its own contagion beyond the companies you have listed there on the screen. None of this surprised me. I don't think this surprises really anybody that is watching or involved in the flip community,
Right.
that you're going to have a fallout when an industry itself, a specific industry, in this case cryptocurrencies, has been challenged. But make no mistake, the stock market went down. If the stock market goes down and people are selling to raise cash, one of the other things they're going to sell is crypto. They're going to sell real estate. They're going to sell the most easy thing for them to sell. Crypto, in many ways, lived on its own price. As the price declines of something, generally people will sell it even more, hoping to get something out of it. Not, for example, if you had a profit, you want to try to keep some profit. If you have a loss, you want to kind of minimize your loss. This contagion is spread deeply into the crypto community. Many companies rely on a certain price of things for them to succeed. So, for example, you can probably look at those companies. Some of them went out of business at 50,000 on Bitcoin. Some of them may have gone out at 40,000, 30,000, 20,000. And finally, FTX goes out when the price gets to 20,000. And so there probably could be more if the price goes lower. And I can tell you this, there is no mistake that the price of crypto is inextricably, at least now, tied to the price of the US stock market, and therefore the fact of worldwide stock markets. Interest rates have gone up, that hurts crypto. Cost of carry becomes higher. Cost of carrying some investment like crypto becomes higher. That means the price literally goes down. If you notice that gold until recently, we're having a little pop, has also been basically down all year, very similar. So where the stock market goes, crypto will go in the short run. If the stock market steadies, that's good for crypto. But if the stock market has trouble next year, that's going to continue to put pressure on crypto. Crypto is not a buy in here. It is a hold. If people are holding stocks, I can tell them, can I say, go sell them? No. Again, that's a question for someone's financial manager. Myself personally, I hold a few stocks as well that I've lost on myself, even though I put most of my money inside of these kind of smart folios, because that's what I believe in the most. And I'm busy doing other things. I can't afford to just trade like a lot of people. So, because time is too precious.
Mm-hmm.
The crypto markets are going to be tied in 2023 as they were in 2022 to the stock markets around the world. And we expect more fallout as the price might go lower in the coming months in 2023.
That's an excellent segue, Kelly. Thank you so much for that. So let's now talk about 2023. You just got done saying that the stock market and crypto market, at least for now, are working in tandem, right? They're going to go up together and down together because it's crypto, particularly Bitcoin, is kind of pegged to the stock market for now.
For now.
What does that mean? What can we expect in 2023 in the first couple of quarters?
Well, this is my note, and this we will play again next year for better or worse. I'll first prognosticate that I think the stock market right here at the end of the year is kind of signaling where it's going to go early next year.
Really? Okay.
Yes. Sadly, I feel the stock market is prone for more lows and very likely new lows sometime within the first quarter or second quarter of next year. The Federal Reserve is trying to draw out the pain by keeping rates high. Yes, they've only increased by 0.5% in the last move, but don't not expect more half-point hikes. We are now sitting at the highest Fed funds rate. I believe we're at 4.5 area, and I think we can go to 7 before this is done.
Got it.
7% is not good for a lot of businesses. This is why the tech sector has been under such pressure. The tech sector is sensitive to interest rates, just like the housing sector. That's why the tech sector has already owned its pain. They have already created layoffs. There are more layoffs scheduled for next year on the big players, the Googles, the Apples, the things that Amazon will lay off in January. They always do. And other tech sectors from Netflix to Meta. Everybody's already announced their layoffs, huge job cuts across the board. And if this is the case, that means they're anticipating the problems again coming next year. Most of these stocks have hit COVID lows. Amazon, for example, is below COVID lows. Apple is now 126 area, making a new low for the year today. And you can see that these are stocks, I believe Apple will go below 100. That is not bode well for the Dow Jones or the S&P 500. I expect new lows in the first quarter or second quarter. The way determining which quarter it is all about Jerome Powell and how aggressive he gets and how much he wants to hold off the pain. So he may miss a rate cut or a rate hike, and then maybe the next month he'll put the hike in. So the market will think, oh, he's not hiking anymore, and therefore they'll probably put maybe a little rally in it, but then they'll hike again because inflation is not easy to tame. This is not like a clock where we can find out the gear that's bad. This is something that is far from a science. It's a lot like an art. And
It
so,
sounds like it sounds like an art in doing the opposite of, how you say rip off the Band-Aid really quick and just get it done. It sounds like they're doing the exact opposite of that. I can't think of a good saying for it right now, but it
but that's
sounds like they're
close.
trying to draw it out. Is
I
that
would,
right?
yes, he's trying to draw it out. Why? Because he doesn't, the Federal Reserve, unlike European central banks, has a dual mandate. The dual mandate, everybody's aware, is to maintain employment and also maintain price stability. Other countries, their central banks have the job of managing inflation. Europe has understood inflation all the way back to the 20s. And they are adamant not to recreate that because at the end of the day, Nazi Germany came out of inflation from the Weimar
Mm.
Republic. So we don't want that again. Europe doesn't want that again. So that's why their mandate is all about the price stability. Our mandate, on the other hand, says that our Federal Reserve chairman has to manage price stability, but also maintain high unemployment. Sorry, high employment. He can't do both. These things run there together. The higher the employment, the more likely it is to have inflation. This isn't like the Laffer curve or anything like that, but it is a well-known science in any world under monetary policy that if employment goes to a max, you are likely to have inflation at some point. And by the way, folks, we just added the largest budget in history in this country at 1.7 trillion. And Republican, Democrat, or independent, that is a large bill. And we know there's a lot of meaningless spending in it. We don't even know what it is. But those are things that now Chairman Powell has to be able to manage. He is getting no help from the federal government, unlike the 80s, where he did get help from the federal government, where they did cut taxes and they cut expenses. So we have a real problem here as we come out of COVID and the federal government insists on spending money to help families, which is a good thing. But at the end of the day, there is a cost to that. There is no way around higher taxes in the future. You can't cut taxes out of this kind of spending. And if you have higher taxes, again, that is also going to drag the economy. So for 2023, the first two quarters, look for them to be volatile to the downside. I expect at least another 20% lower. And a year from now, we'll replay this and see how wrong I am or how right I am. And by the way, that doesn't mean the year will end on a bad note.
Right.
But know that in the first two quarters, look for there to be a lot of instability,
Mm-hmm.
a lot of instability in price, and look for people to be laid off. Look for lower housing prices. Look for marginally lower crypto prices. So even if the stock market goes down, and they are correlated, they will go down together with crypto. Crypto has hit an interesting floor because the FTX information, for example, only moved crypto 15%. Now it seems like a lot, but on a nominal basis, it was only 3,000 crypto dollars, not the 50,000 crypto dollars that were lost prior to FTX becoming transparent with their problems. So
Absolutely.
this is a case where if the market does what I suspect it will do, our algorithms will remain out. Anything that has the SPY in it, which is most portfolios, will remain out. Other portfolios like Red Oil or SPY might have a few things in them and give you a smaller exposure to the stock market. I recommend holding on to these kind of positions in the short run and look for some time. There is a chance that the AI will give us an unusual signal between now and within the first two quarters to go long the market.
Mm-hmm.
And I will add one more thing to that. Generally speaking, we've made many presentations, and you and I talked about this the other day, Aaron.
Right.
We've all learned, and I want everybody to listen to this carefully. We all learned that missing the 10 worst down days over the last 20 years is a lot better than missing the 10 best up days. We have missed a lot of bad down days this year. I hope and suspect we will miss a lot of down days, big down days next year. But if the market at any time gets down to be down at least 40%, that kind of an area, I can tell you that putting algorithms and machine learning and derivatives of price algorithmic trading aside, generally, people that have a 10-year perspective of buying a market when it's down 40%, and I'm talking the S&P, only the S&P, you're going to do well over the subsequent 5 to 10 years. So if you're buying a market that's down 40%, I don't think people mind. I certainly don't mind of losing another 10% or more, marginally more, as long as I know my upside could be literally 80%. So there is a time when we have to be able to look at the market for what it is and what it has done historically and bet, regardless of our feelings, because it'll look terrible at the time, to make a bet, a longer term bet on the world of the United States of America and the global economies, to make a bet when the market is down sufficiently. Down 9-10% on the Dow, down 20% on the S&P or 40% on the NASDAQ is not sufficient in my mind. That is not enough of a dip to buy. So 2023, I think we're going another 20% lower within the first 2 quarters. I think the year could maybe turn around somewhere between the end of the second quarter, beginning of the third quarter. And I have no crystal ball beyond the first 3 quarters. I can guess 9 months out and feel with some accuracy given the data that we've collected, but I'm not going to go beyond that. I will not make a year-end forecast for the market like many prognosticators do, because I don't feel that matters. It matters how we behave tactically, and these models behave tactically in 2020.
Got it. So Kelly, I want to wrap up with something in just a second, but I want to put something fun out there for all of us here. We have about 30 something viewers live right now. Hopefully you're all engaged. If you're just listening to it like a podcast, this is the time to listen up, get on your phone or keyboard or whatever device you're listening to and pay attention, because trivia question for you. And I only found this out today, so I thought it'd be fun. How many coins, crypto coins out there died in 2022? No Googling, no Googling. And even if you tried, you got to dig a little to find it, but no Googling, just off the top of your head, just use your gut. How many crypto coins, ICOs, or even older coins, all of them together, how many of them died in 2022? So type in your answers in the chat, and the one that's the closest is going to be one of our winners. In addition to one of the other, we have 2 winners coming up in just a couple of minutes. But so yeah, type your answers in right now. So Kelly, last year around this time, we were a little bit almost like apologetic to our users, saying like, oh, we underperformed the market this year. And because it was like a crazy 20 something, almost 30% on the S&P last year. This year, we are definitely ahead because of the crash. So if you compare the two, we don't have visuals for this right now, but just explain it just in layman's terms. Are we ahead overall if we're just comparing the last 2 years? And explain to us how that happens and why that's actually a good thing.
It's a conversation that I really want to have with everyone, and I think most people on our platform know this. There's the biggest thing that I'm always fearful of people that are investing in the market is that they chase returns. They chase the return of, for example, an ARC trading, which was the innovative model. It went up 80% in a year. Then it grew to 65 billion in assets. Then, of course, it lost 80% last year. 80%. It's about absolute return. It's not about return. Some years you will beat the market. Some years you will not beat the market. When a market goes up all year and closes on its high, like it did in 2021,
Mm-hmm.
Flip Investor, in almost most of the portfolios we have that represent 90% of the population, which is an aggressive portfolio or a conservative portfolio, an aggressive portfolio will not beat a market that gave us no room to manage risk. In other words, all year of 2021, it was a risk on year. There was no dips, none. So therefore, when our product, which is trying to manage risk, attempts to essentially go to cash, which is like an insurance, well, we think the market could go down, then the market continues to go up. We're forced to buy back in at a higher price, and therefore we're going to underperform.
Right.
Where we do well is when the market doesn't. And that's the key. The key is to stay out of the bad days or bad years or bad months, and then try to reposition and own the market cheaper. This is why the hardest thing in the world to explain is the difference between performance and absolute performance.
Right.
Very difficult. People want to say, "Oh, this was up 25% for the year," and the someone like us might only be up 15% for the year. And they'll say we underperformed by 10%. This year the market's down 20%, and we're down, depending on the portfolio, about 5-6%. So we've overperformed by around 14-15%. So we're about even over 2 years, depending on the portfolios. Since the portfolios are different everywhere, very difficult to gauge it. But
Right.
I can tell you, over time, it is very easy to show that the longer you stay with these methods, the more kind and gentle your journey will be, that
Yep.
mimics the market, likely will overperform the market, but most importantly, manage your risk throughout. We never want to have a person retiring after a year where a market is down 40%.
Right.
And that is the key. The NASDAQ itself is down 40% this year, but it was up almost 100% since COVID. For it
Yeah.
to lose 40% is nothing. I wouldn't be shocked to see the NASDAQ lose another 20% or so.
Wow.
And would that be devastating? Yeah, if you own it. If you see Apple at 100, it's going to be painful. But those are things that will look pretty good, I think, at a cheaper price. Hopefully, our algorithms and our artificial intelligence signals will be smart enough to buy the market lower. So at the end of the day,
Absolutely.
to answer the final question, it's absolute return. We manage the risk, and risk is like insurance, and insurance costs money. And the money it costs is the fact that your return on your particular investments in our portfolios will behave different than the market. And that's what we want it to do.
I mean,
Behave
we
different
have
than the market.
someone. Yes, absolutely, and we even have someone in the chat who chimed in saying that their Fidelity account is down 67%. Right. And so that's the kind of thing that it doesn't happen every year, because we always talk about how 85% of the time the market goes up, but those 15% of the time can be very damaging. And that's the kind of thing that iFlip specializes in protecting you against. So we'll leave it there for now. We're absolutely going to check back in a quarter or two to see how Kelly's predictions actually panned out. But for now, the fun stuff, I wish I had a drum roll sound effect here. I'm going to get one of those because we are about to get in. I do have the, let me just scroll up because I know what the number is. I have there's two winners because two people said the exact same thing. Let me just, whoops, that's not, I did not mean to do that. How did I do that? Okay. Sorry about that. Misclick. There's one winner. And okay, got it. Okay, so I have the winners up on my screen. So how many crypto coins died in 2022? I've seen numbers as high as 5,000. That was like, wow, that's crazy. The number, ladies and gentlemen, is 82. 82 crypto coins died in 2022, whether it was because of no volume, no one's trading anymore, everyone sold it out, it went to zero. Scam, the company that released it was deemed went bankrupt. It was deemed a scam, etc. Any one of those reasons. 82 is the magic number. That means we have two winners tonight. Michael Okone, I hope I'm saying that right. I hate butchering people's names. With an entry of 100. That's the closest that we had to 82. And also CLD Innovate. Sounds like a company name, not a person name, but whoever, CLD Innovate. Two entries with 100. You are our winners for tonight. So how do you collect your prize? First of all, what is your prize? It is the number one prize is that you have the Mastering the Markets encore presentation. So the replay, the recording from the Dallas event a couple of months ago will be available to you for free. That is a $500 value. Just under 500, $497 value that a lot of people paid that amount of money to attend. You get that for free. If you already have it, because maybe you already purchased it, then we'll give you a year of iFlip for free. Okay, so you have to be an iFlip customer to actually qualify. So email us at mailbag at iflipinvest.com. That's the email address we use to associate with all of these live shows. Send us a screenshot of your account there. Send us the email that you use for that account login, and we'll get you set up with your prize. Again, congratulations, Michael Okone and CLD Innovate. Congratulations. And that's it for the AI Circle tonight and for 2022. Happy New Year, everyone. We will
Happy
see
New
you
Year,
all
everyone.
next year. Good night.
Good night, everyone. Happy New Year.